I guess it was down about 1,000 points and started to rise back up. And I said, look at the large buys that are occurring. That means that the big boys are getting back in. And I bought a leap that in the same day, I think I made like $12,000 in a day.
It's time for the Trading Stocks Made Easy podcast. Each week, Trading Stocks Made Easy demystifies stock trading and investing so you can profit big. And now, here's the host of Trading Stocks Made Easy, the wealthy investor, Tyrone Jackson.
And welcome back to Trading Stocks Made Easy. Now, today's episode, we're doing something a little bit different. We're going to talk about more advanced trades. And my special guest today is Patrick Giuliano, and he's been in the Wealthy Investor Program for a shorter period of time than most, but he's had exceptional, extraordinary results. And he's a fascinating guy, and I got to welcome you, Patrick, to Trading Stocks Made Easy. How's it going?
Thank you very much, Tyrone. Everything's well, and yourself?
Doing very well. Now, we have a lot of issues to get into here, but I always, as I always say, I always have my students on the show because you're real people, right? And Patrick, a lot of people in the program actually come from the entertainment business.
Sure do.
But you come from the medical field. So just give us some background on your family, exactly what you do in the medical field, and then we'll get into trading.
Well, I started out my life going to school to become an engineer, and I moved up the chain in the engineering companies very quickly, but I realized that that's not what I wanted to do with the rest of my life. So I enjoyed helping people, so I went into the medical field. And what I decided I wanted to do, which was a very difficult area of medicine to work in fact, it may be considered in the American Medical Association, considered the hardest area of medicine to work in, is called sleep medicine. And the reason is, in order to work in sleep medicine, you have to turn your life upside down in order to help others sleep well. So instead of me sleeping at night, I help others sleep at night. So that's basically what I did. And a few days ago, about a week ago today, I retired. And I am doing trading as my primary source of income right now.
Yes. Now, and first of all, I just totally love your story. But let's just go back just a little bit, because I think it was 15, 20 years ago where you actually took a job on Wall Street for 3 days?
Actually, I took a job on Wall Street for about 3 months.
Okay.
My first day was Black Monday. Mm-hmm. People are jumping out windows wanting to kill themselves as I'm filling out my paperwork in human resources to take a job as a portfolio manager in a very large portfolio management company.
And how did you find your way to that firm? Was it through a family relationship or what?
Oh, no, they found me through my education.
Okay.
They actually recruited me out of the company I was working at.
Okay. And so did you know anything about stock market trading and investing at that point?
Yes, I knew a little bit, not anything where I would brag about it, but enough to get me through where I could take enough courses and do the right educational activities in order to be able to spin up to speed. And then on the job, you get some experience that is the true experience in life, is doing, not just reading and learning how to do something out of a book. It's by sitting down and making it happen. Okay.
And through whatever set of circumstances, you wind up, that job doesn't work out, and you build this practice. You build your private practice in the sleep medicine business. Is that right?
That is correct. I did that for between 15 and 20 years.
Between 15 to 20 years. And you were very successful at it. Is that correct?
The reason is because when you work in an area that others fear to tread, that's basically been my lifestyle. I succeed and actually flourish in situations that others try to avoid. And that's been my hallmark of my life, and that's why sleep medicine and I just happen to be a perfect fit together, because 95% of the people who enter sleep medicine never make it to their 6-month review.
Okay. Now, in your sleep medicine practice, you are up like all night with your patients and clients. Is that correct?
Absolutely. Every day. I did that 6 nights a week for years.
Yes. And I don't know how you do it, because today's about advanced trading, and you somehow had this practice and you're doing very well as an advanced trader. Now, just before we get there, somewhere along the line, you and I get introduced. What attracted you to the Wealthy Investor Program? And this is very self-serving for members of my audience, so forgive me. But why, of all people, would you trust me in the stock market?
Actually, it's because of some of your background. You came from a common background that I'm very much in the same scenario where we had, regular lives, that we didn't come from families that had money. In fact, at Christmas time, most of the time when I was a child, the only gifts we got from each other were cards that we made for each other. And you came from a similar background. So what happens is that because of the experience I had on Wall Street many years ago, I actually, when I sat at your classroom for the first time, I was invited to go to your classroom, a lot of the things you were saying was what I knew the institutions were doing. Mm-hmm. I didn't want to trade like a person. I wanted to trade like an institution. And one of the things that I learned from you, which is probably the most powerful tool that you can learn when you're with Tyrone Jackson, is to understand what is the logic that they're employing so that not only are you on their coattails as they're dragging the stock up, you're there thinking of it exactly the same time they are. And as you see what you've been believing for the last few hours or a few days is about to happen, and you see it start to happen, you can jump in immediately and have the confidence that what you're doing is correct.
That is correct. So your first call, the first trade that I always teach is covered call writing. We establish that on every show because it begins to shift your mindset as to what is possible. There's money to be made in the stock market every single month. Since we're going to talk a little bit more about advanced trading, what do you favor, the in-the-money call or the out-of-the-money call as a trader? What
I do is I react to what's happening in the market. Mm-hmm. If we were in a complete, bull market, an imbecile can make money in a bull market, and you just do your out-of-the-money calls and things just seem to work out and you put money in your pocket. What I like about what you have taught, especially for the last 6 months, or maybe even a little bit more, you've seen that the stock market has either been stagnant or maybe in slightly bearish territory. Mm-hmm. And what you taught us is how to make money even when other people are sitting there watching their stock saying, oh, God, I'm in the red today. Well, that's not what I wanted to do. I wanted to be able to say, okay, I see what's happening, and how do I make money doing that? And that's what you've taught us. Yes. Now, you're unusual in the sense that you have excelled to advanced trading. I don't even know if it's been a year and a half, and you're doing very, very well. So in addition to owning stocks, you're also owning long call options, also known as LEAPs, long-term equity anticipation securities. Mm-hmm. What drew you to trading these longer dated options as opposed to, let's say, 6-month options or 3-month options? Well, it's the intrinsic and extrinsic value that you can gather by what you buy at what target levels or what strikes you buy, and it gives you the time to be right. And that's what you've taught us in the classroom. In fact, you were the one in the classroom when I was telling you I was compounding Apple, and I still said that I know it's only 9 months away, but I was compounding the January 2016 strike. You said, Patrick, you may be doing well, but 9 months is getting to the point where I think there isn't enough time for you to have a big correction happen either in the market or a big correction happen in Apple, and you're going to regret it. So I stopped working with the long call of the 2016 January expiration. Yes. And I moved to the leap of the 2017. What attracts me to that is that because there's so much time involved, sometimes more than 400 days, you have a lot of time to be right. And if you believe that the market is not just going to collapse like some people show on TV, yes, there's going to be corrections. There's probably going to be one in the next 2 to 3 weeks. There's going to be a few bad days in October, and the reason is this is when it happens. Yes, that is correct. What happens is that when you are buying something that you don't have to be right for 400 days, you don't care what happens in October. There you go. And the reason is, although you'd like to make some quick money, you know that in the long term you're not going to lose any money, so it reduces your risk so significantly that you're not sitting there biting your nails and getting gray hair because of it. Yes, that is correct. And so when I teach more complex derivatives, which it's just basically buying long calls, we buy a lot of time because that call option will move up exponentially as the stock moves up, and time becomes kind of like an insurance policy for us. Now, for those of you who understand advanced trading techniques,
Patrick, I always teach with the Delta 50 leap option because the derivative math is easier on a Delta 50, right?
Yes, sir.
Okay, so we know the stock moves $1. You look at the bid-ask spread. You can tell how much that longer derivative is going to move. But there are times when I've said, hey, this trade is about the Delta 70. And then there's some trades when I say this one is about the long leaps Delta 30. How do you balance out that in-the-money long call, right, that can grow very quickly if the stock grows, with the Delta 50 in your trading?
I do a thing called compounding.
Yes.
And I think that won the Nobel Prize. The whole idea of compounding, I think about 5 or 6, 7, 8 years ago, I don't remember exactly what it was, won the Nobel Prize. Because if you are going back and forth from a Delta 70 to a Delta 30 or 35 or something in that range, what happens is that if you're bouncing back and forth based on how the market is doing that day and what that particular stock is doing that day, and the ones that I've been using the most are Starbucks, Apple, and the Qs. And with companies like that or an ETF like the Qs, you can feel comfortable enough to realize that you're not just with any particular stock that you're doing this with. You're with one of the stocks that is the preferred stock on the stock market.
As we say in our program, that stock is in favor.
That's exactly right.
Yes.
And what happens is because it's in favor, you know that even if the market takes a downturn, this is going to turn down at a much slower rate, giving you the opportunity to do some things in order, if things didn't go exactly as you planned, there are methods of adjusting to that to be able to make a little bit of money until your plan starts to come to fruition. So what I do is I compound by going back and forth from the 30 to the 70 delta. What that accomplishes for me is I end up at every cycle with a little more contracts than I had when I started. And what I do is when I get to a point where I have doubled my contracts,
yes,
I then buy, as an example, I'll buy Apple, or I'll buy H&R Block, or I'll buy Kroger, and I'll take those and I'll move my money out of a trading scenario
Correct.
Into a long-term investment scenario.
Correct.
Where I'm growing my wealth, not just trading every day.
Yes, because there is a difference between trading, buying something and quickly selling it, and then investing for the long term, meaning that you're going to hold a stock.
That's exactly right.
You know that I favor, mostly in a bullish market, this alternating of contracts. Because your Delta, for those of you who understand, your Delta 30, which is out of the money, is always going to be cheaper than your Delta 70. Therefore, you are going back and accumulating more contracts.
That's correct.
Now, what I have said, Patrick, and I just want your, what you've learned from this, is you cannot compound forever. At some point, you must convert into a long-term investing strategy, right?
And that was something I didn't learn right away, to be perfectly honest with you. I had one of these moments in your class where I started to realize just because my account is growing, that doesn't mean I've been gathering wealth.
That is correct.
So what I did was I made a plan for myself that as my trading is successful, I take money back out of my trading portfolio and I put it into long-term investments. So it's just there and it's just doing its thing.
Mm-hmm.
So that even if I make a mistake now, it doesn't affect my long-term wealth.
That is correct.
It just affects portfolio and where I'm trading.
That is correct. So we always seek for some sort of balance between quickly selling something and holding stocks for the long term. And I think, if I were to criticize some of the other programs that I see out there, is everything is about make money, make money, make money, but there's not enough, hey, plant seeds for 24 months from now, 36 months from now, because wealth is a feeling first. And when you start to see your account value rising, it gives you more confidence overall.
Well, it's not only just that. One of the things that if you just were to work in options and not have the stock in another component or another layer of your portfolio, what happens is that as the stocks or the ETFs grow in value, if you're not in on the stock itself, you're missing out on a component of the growth and the gains that you would have on the stock itself or the ETF itself. So what happens is that you want to have a balanced portfolio in which you're looking at this long term, and you're working it operationally every day. So when I look at my stock market, it's just like when I looked at my life. I said, okay, this is the money I put aside for the future, and this is the money I work with on an operational basis every day.
Now, the thing that you have, I've noticed, is that you tend to be very disciplined, right? So if I introduce a formula and I say, hey, this is a wealth building formula that I suggest you utilize, now you will test it and do that. How important is discipline when it comes to trading and investing?
Well, when everybody comes to the classroom, everybody starts off thinking that it's not the discipline, it's what you're learning how to trade. Really, what you learn as you go along in the classroom, it is that part of the discipline is the trading, but that's not the entire discipline. And if you don't follow a strategy, then you're really haphazard. So the strategy is your discipline. When you stay in the discipline, things happen in a more expected manner.
Yes.
If you're going to be right between 90 and 95% of the time, you have to follow a discipline. Can you make big money by jumping out of the discipline? Sure, but then you can just lose money just as quickly. So what happens is staying in discipline keeps you in that 90 to 95% range where when you make a trade, you know that over a year's worth of trades, 90 to 95% of the time, you're going to be right. Why? Because the discipline puts you in the right place.
That is correct. Now, let's go back to Leap's options. And for those of you who don't understand exactly what we're talking about, all you have to do is go to thewealthyinvestor.net and download the free ebook. And that's really going to introduce you to the market, and you can get in on this game and evolve to some of the advanced issues that we're discussing. Now, I want to talk about spreads for a moment, because we will sell front month calls against our long-term Leap positions to start.
That's a calendar spread.
That's a calendar spread to start to recoup our investments if the trade doesn't go well. Do you utilize that?
Oh, of course. But actually, I think there's a clarification to that. And this is what I mean by when you said doesn't go well, when you and I talk about what doesn't go well, we're talking about 6 or 7, 10 days might go by. What we anticipated didn't happen.
Yeah, we didn't make a profit. Yeah.
That's exactly right. So what happens is when that occurs, now you know that within the 30 days you get to a point where you say to yourself, okay, it's time for me to write some front month calls against my long-term Leap.
Yes.
Why? Because what your original strategy was didn't seem to pan out, even though it was an intelligent strategy. However, what occurs then is that you have a method of re-steering the ship so that you can still make money that month. And that's what you want to be. You want to be positive as often as you can every month. And what it gives you is the way to re-steer the ship. Just because what happened first in your first method of the trade didn't work out, there's a step 2, there's a step 3, there's a step 4. So what happens is that you can't just stare there and say, oh, gee, things didn't work out. Let's wait for Apple, or let's wait for the Qs, or let's wait for Starbucks to go green. Well, no. There are things you can do before that happens so that you can accomplish a positive outcome even when your initial strategy didn't go well. Now, when you say don't go well, we're talking days, weeks, maybe a month.
Right.
That's not, it hasn't gone well for 6 months or a year. What we're talking about is doing something when it doesn't work out immediately within the short term, what you can do in order to be able to make things positive and still put money in your pocket every month.
That's right. Every single month we make money in the Wealthy Investor Program, whether stocks go up, go down, or stay the same. Our job is to extract income from the market every single month, constantly.
The reason that the market is going up and down and has been bracketed, or it's range bound, many people call it range bound, is that there are people making money every day when that goes up a little bit, and there's money would be made when it goes down a little bit. So that actually is happening because people are making it happen. When I say people, I mean the guys who are running or the gals that are running these big institutions. They're making those things do those things.
That is correct, because they have the capital to buy 1 million shares. So the rest of us kind of ride their coattails. And when you really understand those signals, you're kind of like riding the wave with what I call the big money.
That's exactly right. Which I said in the beginning of our conversation is that when you can anticipate what these hedge fund managers or these big trading organizations, when you can see what they're doing and why they're doing it, it's not like you're a few days behind on their coattails. You're right on their coattails, and that's where the money has been made. As they're riding it up, you're riding it up with them. As they're riding it down, you're riding it down with them. And if you're too far behind, you're not making money.
Right. Exactly. Now, Patrick, let's just talk about this because we're talking about like options trading. Tell us in dollar amounts so that now people understand that this is not just theory that we're talking. Tell us in dollar amounts some of your best trades using these long-term leaps.
A few weeks ago, the stock market took almost an 1,100-point hit. And in that same week, the stock market actually went up and down a record 10,000 points in 5 trading days. So in most people's eyes, when they say, oh my God, it went down 1,100 points, they think it was a catastrophe. That wasn't a catastrophe. That was an opportunity. And when you saw that the big money was buying right back in,
yes.
Just so you know, that 1,100 points, I think it was 1,077 at one point it was down. That went down in the first 7 minutes of the opening of the stock market that day. And then what happened was that was all electronic. Then what you saw is what the institutions were doing is they were saying this is a buy opportunity, and you saw the money coming back into the market. And that was when I bought a leap at, I guess it was down about 1,000 points and started to rise back up. And I said, look at the large buys that are occurring. That means that the big boys are getting back in. And I bought a leap that in the same day, I think I made like $12,000 in a day.
Yes. And that's why Patrick and I are having this discussion. Even if you don't understand what leaps are and what he's talking about, $12,000 in one day is really good money.
Now, that doesn't happen every day. In fact, what happened that day was unique to the stock market in more than a century. However, I was prepared to know what to do. Once I saw the market, just electronically just selling down, and then I saw that turn that it made, and I saw that big buys were occurring, I said, wait a minute, that's the bottom, and now we're on our way back up. And I waited just a little bit of time just to make sure it wasn't just, a few people or a few organizations jumping back in. I wanted to make sure that this was large institutions that were making, what we would call buying low at a bargain price and, selling it when it got back up. And that's exactly what happened. That day, the stock market dropped 1,000 and came back 1,000 in the same day.
Yes, and that is volatility at work. Now, you make some really great money for yourself every single month, and you've mentioned that you're going to shut down your practice and just trade full time. What has getting a financial education, learning how to trade from home, what has it done for you and your family?
Well, here's what it's done. It's given me the opportunity. I guess I explained before, the lifestyle I had was I didn't have a life. What I did was I made other people's lives better. I'm at the point in my life where I said, you know what? I've done that long enough. Now I want to focus in on creating the nest egg for my family, and I want to be able to generate wealth so that my children have opportunities that they wouldn't have had otherwise. So what I've done is been able to retire, which happened just about a week ago, to be able to retire knowing that although I am not doing what I was doing from an occupational point of view, I don't have to worry about a lack of income because my income now is the stock market.
Very good. And even though we mentioned some of the sophisticated strategies like how we compound leaps and all of that, are you still a covered call writer? Are you still doing the basics? You
have to. And the reason is that as an example, you talked about a calendar spread before. Not everything that you put to paper and then put into application and say, okay, I'm going to buy this now. Every single time you do that, it's not going to go right. And one of the things the covered calls help you do is to be able to, I don't want to use the word hedge, but that might be the right name. But what it does is it gives me an opportunity that if my logic was not proper immediately, hopefully the logic, because we're talking about long-term calls, which are these leaps that are greater than 12 months in expiration. I have plenty of time to be right, so I don't have to worry about losing money. However, I want to make money, and I want to do that every month. So what the covered calls help me do is that I did not make a huge investment by buying the stock. Let's say the stock was trading at 100. I buy the surrogate, which is the leap.
And you know how I feel about a ratio, right? Because we did talk about that, which is a trade that is half covered call and half front month call against your long-term position. I feel very strongly about that. Because we talk about, $12,000 in a day. And like you're saying, that doesn't happen very often. That
was the one day in my life that I probably will never see anything like that again. And the reason is that hopefully we never see a market that goes 10,000 points in 5 trading days and doesn't go down 1,100 points in 5 or 10 minutes and then spend the next 5 hours, inching its way back, which is what happened that day.
Yeah, but you know what? You and I are ready for it. I'll tell you that much.
So the most important thing about the Wealthy Investor Program is being able to understand what to do, whether the market is bullish and going up, market is bearish going down, or if it's range bound, which it's been probably for at least 9 months, maybe even a little bit more, and knowing what to do in all 3 of those scenarios in order to be able to make money.
That is correct. In the strategies that I teach, we make money when the stocks go up, go down, or stay the same. And that is very powerful because that's the only thing a stock could really do. Patrick, do you see yourself trading for the rest of your life?
Absolutely.
And why do you say that?
Well, first of all, it's exciting. It keeps your mind going and it makes you think through things. One of the things you taught in class is never push the button to buy anything unless you've created a scenario that says, what if this goes terribly wrong?
Correct.
I always have an alternate approach to re-steer the ship if things instantly, when I say instantly, within a month or so, don't go correctly.
Correct.
And therefore, just because I did something with a long-term leap doesn't mean I have to worry about time because I may have 400 days to be right. However, I can still make money in the short term, and my long-term position still is out there doing what it needs to do.
Now, for someone who wants to learn how to trade derivatives like call options, what advice would you give them? Because they're very exciting to trade, but what advice would you give them?
Well, first thing is that if you're undisciplined, you're not going to make money on a regular basis. The only way to make money regularly, you call it being disciplined, I call it being methodical. And what I mean by being methodical is that you have a plan, you have a strategy, and you stick to it. If things don't go well, you've already got another plan in mind because things might not go well. And even the best, traders in the world know that, hey, I'm going to be right 19 out of 20 times or 18 out of 20 times, but there are times when I'm wrong. And I need to know what to do in those scenarios in order for those not to become so degrading to my life or to my portfolio that it turns into a disaster. So what I do is I have a plan on my plan. So the best thing to do is be disciplined. Follow a discipline. If you see that there's a thing that you've noticed on a regular basis, and Tyrone, you could probably tell everybody that's listening to you now that I probably ask more questions than anybody in that classroom for the last 18 months.
Yes, you do.
And the reason is I see some things. That doesn't mean that I'm seeing something you haven't. It means it might be something that you've seen before, and I wanted to know what your take is because more than likely you've seen it before and you've recognized what to do in that scenario, and that's why it still becomes part of your discipline because now I have an expanded discipline. What happens is when you first are in the class, your discipline is narrow. Your focus is narrow. What you do is as you learn more and more, your box gets bigger and bigger, and you have more ability to re-steer a ship if things go wrong or to take advantages of opportunities that showed up that maybe you didn't even expect.
That is correct. And so I just want to emphasize, it's not just about making big money, fast cash all the time. What we do as traders is we want predictable results. We want money to come in on a predictable basis, even if some of our trades don't go well and others perform the way that we anticipate. Hey, Patrick, thank you so much for taking some time out of your very busy day to be a guest here on Trading Stocks Made Easy. I really appreciate it.
My pleasure, Tyrone. See you next week.
See you then. Back in a moment with more Trading Stocks Made Easy.
You're listening to the Trading Stocks Made Easy podcast. Want to learn more about how to trade and invest in the stock market? Visit thewealthyinvestor.net/products. That's thewealthyinvestor.net/products and order the Wealthy Investor's Guide to Stock Market Success audio series. This easy-to-follow 5-CD audio series and manual will teach you the basics of how to buy and sell stocks, how to collect quarterly dividends for life, plus hidden income generating strategies like covered call writing and volatility trading. Start creating financial freedom right now. Get the financial education you need to get ahead. Visit thewealthyinvestor.net/products.
Wealthy Investor, Wealthy Investor, WealthyInvestorRadio.com.
Okay, welcome back. In this show, I know we talked about some very, very complex, or what may sound like some very complex issues, like what is a leaps option? What are covered calls, in the money, out of the money? You see, when you have a financial education, just like any other pursuit, you're able to use language with fluidity. I wasn't born into a wealthy family, but today I learned how to speak the money language, and trading for me and the language has become kind of secondhand. Now, in this episode, Patrick also talked about one of his best days being a $12,000 day. Obviously, that doesn't happen all the time, but our goal as traders and investors is to be as consistent as possible. So if you're starting out trading, for example, maybe you just want to get to $500 a month consistently, or maybe you're trying to get to $5,000 a month consistently. Covered calls allow you to do that. But as I always talk to you about on this show, before you begin any trade or open a brokerage account, financial success is all about your belief systems and what you believe is possible. Your belief systems are very powerful. Millionaires have a specific belief system. You know, I want to say one other thing about millionaires and a millionaire mindset. You don't have to be a millionaire to begin to think like a millionaire. If you want to know some of the concepts that we've talked about here on the show, I put together a special cheat sheet for you, and all you have to do is download it for free at thewealthyinvestor.net Millionaire Secrets. That's thewealthyinvestor.net Millionaire Secrets. When you download that special report that I put together just for you, it'll start to introduce you to some of the terms and the money language to start that financial education. I hope that you join me on this journey. Thank you so much for listening to this podcast episode. Even if you don't understand everything that was said, you should know that there's a whole nother world out there, and that world has your name on it, and it's called stock market trading and investing. This is Tyrone Jackson, the Wealthy Investor, saying thank you, and I'll see you next time.
You've been listening to the Trading Stocks Made Easy podcast. Be sure to rate and review our show on iTunes. While you're on iTunes, be sure to click the subscribe button and you'll automatically receive our next episode.